Hi, I'm Vince Molinari, founder and CEO of FinTech TV, and you're watching Taking Stock.
Two minutes to go here into the closing bell on the trading floor of the one and only New York Stock Exchange. Speaking of one and only, the great Einstein of Wall Street, Peter Tuchman himself of TradeMoss, joins me. I've been describing this as a meh kind of a day. The market's it's kind of up, it's kind of down, light volume. What'd you see to kick off the week?
Not really. I think there's a lot of big moves in different individual stocks. So I think it seems rotational. I think the overall thing is, think about the news cycle all weekend long was obviously what's going on in the Gulf before moves. I'm sure people are curious why, after we made this attack thinking we should get control of it, now Iran is actually in control and is actually not letting the US and or Israel go through there. And so that whole breakdown of any kind of communication and any kind of a deal is causing the problems. We're up again, Brent, crude, up $4. Yeah. So we've seen that when the oil goes up, market goes down. And so I think that the market tried to get some momentum this morning, did not make it. It was more heavier weight. You obviously saw Nvidia getting hit down, but people need to understand it was up 10% the other day. So when these stocks are down in one day, people need to realize it's like the Korean market, right? It was down 44%, right? If we just look at that side of it, well, bottom line was it did rally back almost as much as it lost. So this market has irrational enthusiasm and not particularly very forgiving sell side. So you're seeing these massive moves across the board. I think this is an oil trade, trying to get some clarity about what's happening in the Middle East.
Peter Tuchman, thank you for being here. Western Midstream set to do the honors. More Taking Stock. And there you have it, your final tail to tape on this Monday, August 10th. The S&P 500 down fractionally, the Dow down 0.1%, the NYSE Composite Index, the best of the bunch today, settling in at yet another all-time high close, finishing up about 0.3%. The small caps, the hardest hit of the bunch, down 0.6. The S&P down, NASDAQ coming off their best weeks we've seen since April. Leading the S&P 500 today, energy stocks, healthcare stocks, and materials, but a bit of downward selling pressure on real estate, utilities, as well as tech. Nvidia, Apple, Travelers, those are the Dow laggards. We do have some Dow winners, though. That includes Chevron, Merck, as well as Salesforce. To the Mag 7 we go. Amazon pulling away into the closing auction as the day's biggest winner. Nvidia shares down. SpaceX was down throughout most of the day. Nice little rally here in the last hour, up about 3.5% into the close after Friday's 15% jump. Let's bring in Michael Ryan-King, good friend of ours here on the show, and a very good friend of mine personally, senior market strategist here at the Big Board. So, not by the number at all-time high, but basically still at all-time highs.
Pretty close.
What is keeping us afloat for the most part right now?
Yeah, absolutely. So, I mean, to take one quick step back, if you go back to the Fed meeting, right, the rally that we had from the day of the close of the Fed meeting to last week's high at the open on Wednesday, the S&P 500 was up about 500 points. So call it 6.5% in like a little less than a handful of trading days, right? And since last Wednesday, we've really been consolidating. We're in about a 50-point range for the S&P 500, right? So we're just marginally below that all-time high. I think kind of Peter talked a little bit about it, right? We're seeing the rotation, right? So we've seen kind of the tech stocks that got really just destroyed throughout the month of July, kind of bounced back last week. They did a lot of the heavy lifting, right? But you've seen kind of other areas of the market, kind of also pick up the slack during the month of July. So despite the fact that you had memory stocks and semiconductor stocks that were down 30, 40% in the month of July, you had the S&P 500 that was hovering down 2, 3, 4%, just below those all-time highs. So, you've seen a lot of strength underneath the surface. Earnings has really been the big story in terms of what is keeping this market afloat from my perspective.
You mentioned the Fed. All eyes now, what do we have? We have three FOMC meetings left, September, October, one in December. For September, we're about 50-50, kind of a coin flip. Do we hold? Do we hike? What may change that calculus for the Fed between now and then?
Yeah, so I think Friday's jobs number, which was down 23,000 jobs, right? That does take a little bit of the pressure off of the Federal Reserve, but they've kind of really told you that the real kind of piece of data that they're focusing on is that inflation data, right? So we do have CPI on Wednesday, PPI on Thursday. That inflation data is going to be really the key. Kind of the key driver in terms of what happens from here. Last week there was a story in the FT suggesting, from sources close to Warsh, suggesting that if the inflation data came in hot between now and then, that he would support a rate hike. That's not necessarily like all that out of consensus, right? I mean, obviously, if inflation is moving higher, you would expect kind of the Federal Reserve chair to support a hike. And I think the other piece of that to keep in mind is that if the rest of the committee was going to hike, I don't think he would want to vote in the minority and be a dissenter, right? Because then it gives that appearance that he's kind of lost has lost the committee, right? So, if we do see some hot data, we've heard quite a bit of hawkish commentary from some of the folks on the Federal Reserve. We could see a hike in September.
It's interesting. Look back at Bernanke, Yellen, Powell. They all raised interest rates their first or second FOMC meeting. I learned that last week.
That's interesting. I hadn't really kind of thought back, but now that you say it, that does make sense.
You kind of crack the history books. You're like, maybe some precedent here. So we'll see, of course, what Warsh has to do moving forward. The yield curve.
Yes.
Man, oh man, I love talking about treasuries. It's kind of like the less splashy part, but it's really important here. The 10-year, the 20-year, the 30-year, they're all trading at multi-year highs. Yeah. What does that mean in terms of potential bigger picture pressure on equities?
Yeah, I think, that is kind of, I think, the key thing to kind of pay attention to in terms of where, what can start to derail things from here, right? As we have kind of the long end of the yield curve is sitting right around those all-time, right around recent highs. We're a couple basis points below. As we watch oil prices moving higher, right, that does kind of continue to put some pressure on the yield curve. We're also just seeing so much issuance coming from kind of that technology sector, right? That's also having an impact where you're just having to digest all of this paper. That being said, Google last week, kind of they brought another $25 billion of new financing to the market.
Wow.
Pretty well received by the market. So, we have additional supply, right, and kind of those inflation pressures that are kind of pushing things higher.
Yeah, corporate debt issuance, also one of those less splashy things, but like super important if you want to learn about, go down those rabbit holes. We talked a little bit already about oil, but I want your take. The president said this weekend we are, quote, low-keying. I'm not personally sure what that means, but he also said we're only semi-negotiating with Iran. How are you viewing geopolitical risk priced in right now?
My colleague Eric earlier this morning said he went from the DMX song of "Hit 'Em Hard" to a yacht rock version. We're low keying. Just before we came on, he actually said that the Strait of Hormuz is open, so he did amp up that kind of his rhetoric a little bit this afternoon. In his interview with Axios, right, he had suggested that we were going to start to allow the economic pressures to mount to bring them back to the table. This afternoon, kind of once again brought the, kind of the military escalation back into the conversation.
One man who is never low-keying his interviews here on Taking Stock, the great Michael Reinking of the Big Board. My man, come back anytime.
All right, thanks for having me.
Skylar, grab your mic. Howie will head this way. Here are a few of the top analyst calls that moved the tape this Monday morning here on Wall Street you may have missed. First up, Loop analyst downgrading Domino's Pizza to hold from buy, saying they see sluggish comps overall, lowered the price target from $5.22 all the way down to $3.53. Shares of Domino's down 15% on the year. Next up, UBS reiterating Micron as a buy, saying they are sticking with the stock amid a structural reset. Price target $16.25. Shares up almost 200% year to date. Hello. Finally, Jefferies downgrading Apple to underperform from a hold, saying there are major setbacks to bringing in higher priced iPhones. Shares of Apple up about 15% year to date, the third best performing name in the Magnificent Seven. Howard, let's take a look here at shares of Royal Caribbean down 3.75 on the day. We typically see, to Peter Tuchman's point, an inverse reaction between the cruise lines and moves in the oil market today. We saw those oil benchmarks jump up, so no surprise to see Royal Caribbean fall down almost 4%, one of the worst performers in the S&P 500 on this Monday. We did see a pretty nice jump after the company reported quarterly results about 2 weeks ago, but has now fallen for a third consecutive day. In one of the most recognizable sounds here on Wall Street, but do you know how the NYSE gavel became a part of this iconic trading floor? The New York Stock Exchange's very own Anna Mello now takes you behind the sound, the history, and the tradition. Take a look.
A distinctive sound can elicit strong memories that last for hours or even a lifetime. Those following finance with their ear to the ground will readily recognize the sound of a tolling bell and a gavel strike as representing the close of global capital markets, a soundscape unique to the New York Stock Exchange. The New York Stock Exchange has been striking a gavel at the close of trading since 1817, first to signify the end of trading one single security, and today signifying the end of the entire trading day. Countless gavels have struck this exact same sounding block since 1890, which is before women had the vote, before the first manned flight, and even before sliced bread. This sounding block has witnessed countless stories, and here are just a few. The sounding block began its career during the Second Industrial Revolution. Steam power fueled progress. Railroads and canals connected the country, and Edison's light bulb filled America with a warm electric glow. Originally, from its perch upon the bell podium, the sounding block oversaw a seething mass of humanity in swallowtail coats and stovepipe hats, belting out the cacophonous din of open outcry trading. As the steam age raced ahead, heavy industries like railroads raced to list their securities, brokers raced to meet demand, and the New York Stock Exchange's first permanent home raced towards obsolescence. To make way for both broker and technology, the New York Stock Exchange's first permanent home was demolished in 1901 in order to make room for its current home. As brokers shed their Victorian garb in favor of double-breasted sports coats and bowler hats, the New York Stock Exchange christened its new home on April 22nd of 1903. The sounding block was placed upon the freshly hewn marble of the bell podium, where it has remained ever since. A decade later, World War I sent global financial markets spiraling into a panic. All foreign markets had closed as of July 30th of 1914, and the New York Stock Exchange quickly followed suit, closing the next day and beginning our longest ever closure. When America entered World War II 23 years later, the sounding block witnessed an even greater seismic shift. With nearly 1,000 members of the trading floor community off fighting for democracy, trading floor jobs were filled by women for the first time, starting in 1943. Those soldiers lucky enough to return came back to an America well equipped for growth, as increasing consumer demand, surging product development, and ample disposable income generated an economic boom and a bull market that lasted for 8 years. 2 decades later, the sounding block had a box seat view to the upheaval of the 1960s. As men shed their wool suits in favor of synthetic fabrics, the New York Stock Exchange shed its status as an all-boys club. Active in the securities industry since 1954, Muriel Siebert was attracted by the egalitarian nature of the trading floor, where a broker's compensation was determined by ability and not by gender. On December 28th of 1967, Siebert was admitted as the first woman to own a seat on the New York Stock Exchange. 3 years later, another barrier fell when Joseph Searles II became the exchange's first black member. Even before joining the New York Stock Exchange on February 12th of 1970, Searles had enjoyed an impressive career, playing professional football for the New York Giants, as well as acting as an aide to New York City Mayor John Lindsay. At the dawn of the information age, stock trading had remained mostly unchanged since the sounding block began its career in the 1890s. Each auction was held verbally, and to an outside observer, the floor appeared completely unaltered between 1929 and 1979. But in 1979, the view changed dramatically, with the installation of over 15,000 pounds of computer equipment, all supported by a massive superstructure at the top of the trading floor. The personnel working beneath continued to change their look with the times, swapping out their patterned polyester suits as the CRTs around them changed to flat screens. Today, the New York Stock Exchange runs the last stock trading floor, utilizing a hybrid trading model unique among its peers, utilizing electronic trading technology in tandem with the human element. And with an active trading floor, the sounding block remains in use and is struck at the end of every trading day. Without a pen, a sheet of paper would remain blank. Without nails, a house would fall to the ground. And without a sounding block, the strike of a gavel would be inaudible. This humble object has been struck at every closing ceremony for over 100 years, loyally serving one single purpose: to shepherd the global capital markets, the New York Stock Exchange.
Welcome back to the broadcast. You are watching this Monday afternoon edition of Taking Stock live from the trading floor of the New York Stock Exchange. Our next guest joins us now. Say hello to Andrew Jurak. He is CEO and founder at DRAC. I've been looking forward to this conversation about quantum computing all day long. Thank you for being here.
Well, firstly, thanks for having me on the show, JD.
So, I got so many questions. Let's start with the white paper. You're out with a new quantum computing white paper. What is it called? What's it all about?
So, Dirac is a company that's developing quantum computers based on standard silicon chip technology, and this allows us to scale the technology much faster than any other technology out there. So, in just the standard way that silicon chips can have billions of transistors on them, quantum silicon chips can have many, many millions of these quantum bits. So it means you can scale incredibly rapidly and provide commercially powerful quantum computers just in the next couple of years while driving the cost down. So in just the same way as the standard semiconductor industry has used Moore's law to increase the scale and drive down costs, with quantum computing we're riding that Moore's law curve, scaling curve upwards and the cost curve downwards.
And where can people go if they want to see that white paper for themselves and learn more?
So Dirac.com, our website, has a wide range of publications on it, including our white paper that's coming out.
Andrew, let's take a small step back.
Yep.
Because I think a lot of people are maybe hearing more about the world of quantum computing really in earnest for the first time, let's say the last 18 months. They're trying to figure out what it means in terms of their own understanding of energy and what quantum means. I admit, I think the first I really heard of it were the Ant-Man movies from Marvel all those years ago, and since then I've been dialed in. Make this make sense as a newly emerging technology.
Yeah, so like new emerging technologies, the history usually goes back a long time. The idea of quantum computing actually goes back to the 1980s, where the idea was, how do we actually use computers to simulate nature, actually describe the way atoms and molecules work? Quantum computers use quantum physics to allow us to do that. So they actually go well beyond the power of artificial intelligence and any classical computing. They allow us to do lots of calculations in a powerful way to solve problems that currently can't be solved with existing computers. So just as one example, the design of pharmaceuticals. I mean, obviously incredibly important to find pharmaceuticals to, kill off pathogens and disease. At the moment, it costs around $1 billion for a pharma company to design a new drug. With quantum computers, we have the ability to drive that cost down and to find those solutions much, much faster. So it's a way to model nature, model molecules in a way that is just not possible, even with the most powerful AI.
I get a lot of questions from investors and day traders out there. They want to learn about the splashy quantum stocks. These are very high beta, aka high volatility names, IonQ, Rigetti, etc. Looking back at the last 52 weeks, I was surprised to see how many of them are underperforming even the broader S&P 500. What do you see in terms of price action for these companies in the quantum space that trade publicly?
Well, there's a lot of volatility, in part because firstly, there's not a lot of knowledge about quantum computing generally, as you were saying before. Secondly, we hear a lot of announcements. There's a lot of noise, from the companies about recent technical results. But what investors should be focusing on is what companies, what technologies can really produce powerful, scalable quantum computers for the future. So people have to look a bit past that noise, particularly investors that are looking at long-term solid investments. So obviously volatility is great for day traders, but for people who are looking for those long-term secure stocks, look at the technologies that can actually scale all the way, in the same way as silicon scaled for modern computing.
Can you talk to me a bit about how you see the work for you and your colleagues in Australia and here all around the world at Dirac? How do you fit into this conversation?
So Dirac's been working, previously I was a professor at a university in Sydney, and worked for a quarter of a century developing this technology. We founded the company 4.5 years ago and now spread across the Pacific. So we've got operations here in Palo Alto's headquarters, Chicago and Los Angeles. In Australia, we've got Sydney and Melbourne. 100 strong staff, currently a private company, and our focus over the next couple of years is to deliver our first product of a powerful quantum computer that will show genuine commercial value to our customers. So we're looking not at near-term hype, we're looking at getting serious quantum computing out there of genuine commercial value, and so we've had our heads down focusing on that the last couple of years.
We hear a good bit about so-called quantum breakthroughs seemingly from news cycle to news cycle. Are there specific milestones that matter more than others? What are some of those top milestones that you look for as an industry expert?
The most important milestone, the one that's really going to make the difference for the market, is when quantum computers can generate more commercial value than it costs to own or operate them. At the moment, the quantum computers that are out there from all the companies are well below that mark. We're focused on that, and investors should be looking at companies that are really focused on delivering that. So DARPA here in the United States have a massive program specifically focused on funding companies who are looking to solve that problem, what they call utility scale, when a quantum computer generates more commercial value than it costs to own and operate. And when you're looking at some of the revenue from publicly listed companies at the moment, obviously well below the actual operating costs of those companies.
Sure. Andrew Durack, CEO and founder of Durack, I am really grateful for your time. Congratulations. Thank you for making all of us smarter about what all this cool stuff means. Really grateful for you being here.
Thanks so much, JD. Thank you.
Anytime you're back in New York, please come back on the show. Don't go away. A lot more Taking Stock coming up right after this. Welcome back to the show. If you have ever wondered just how hot and humid New York City subway platforms truly get in the summer months, one independent researcher decided to actually measure it. What he found may change the way you think about your summer commute. Take a look.
Every weekday, roughly 4 million people ride the New York City subway. That's more than the entire city of Los Angeles moving underground. And every summer, they're all asking the same question.
Why is it so hot and humid in New York City subway stations in the summer, and what can we do about it?
So I set out to answer it.
Right now the temperature is around 94 degrees Fahrenheit, the humidity is 64%, but it feels around 115 degrees.
Jack Klein didn't set out to become a subway researcher. He's a computer science grad who moved to New York in 2024, commuting to work every day from Ridgewood, Queens through 14th Street Union Square.
I was really taken aback by how hot it was, specifically in the station 14th Street Union Square that we're in right now. And so one day I just got a digital thermometer gun and I started just going around and pointing it at surfaces in the station.
He posted his research videos to Instagram and TikTok. The content soon went viral.
I was really shocked by the response of people. A lot of people from New York were telling me, like, go to my station in 34th Street O'Hare Square, go up to the elevator 181st Street. Like, people have a very strong connection to their station. So this is sort of like a base level thesis statement in my mind. It's like, oh, a lot of people are affected by this problem, the heat in the subway stations during the summer. but what are the solutions, and is it even being reported on?
That question turned into something much bigger. Klein started building his own DIY sensor network, glued with magnets and taped to blend in to station walls. The sensors were placed across roughly 8 high-traffic stations in Manhattan: Union Square, 34th Street, Times Square, Hudson Yards, 168th Street, and 181st Street.
I wanted them more or less 3 to 6 feet off the ground. I wanted them facing the platform, and I wanted them kind of covert. How can I install these sensors without them getting vandalized or taken away?
Every 5 minutes, each sensor logs temperature, humidity, and something Klein says matters the most: heat index. What it actually feels like to stand there.
So we're in 14th Street, Union Square, 456 platform. The air feels bad, it's super hot. It's all these different kind of factors that make it a very uncomfortable station.
And these readings aren't an outlier. Researchers at Columbia's climate school have cited his data directly.
The whole reason why I'm doing this project is because I think that the heat underground in our subway system in New York City is actually a very real public health issue. For many populations like the elderly, people with disabilities, pregnant women, people on SSRIs, people with POTS syndrome, etc., it's much actual larger health risk in terms of, heat-related illness.
Klein decided to bring his own independent data directly to the MTA.
I was talking a lot to the MTA Climate Resiliency team, which is a kind of the smaller team in the MTA who's doing great work. There's a lot of really talented people that care about these issues that are working really hard on this. I was trying to enter in a data partnership with them, basically just give them our data and have them use it as a understanding of what these stations feel like, but also allowing us to install more sensors. Like I was collaborating with professors in New York who knew how to do this, who had a cohort of students who could help out, but ultimately they just told me that they didn't have the capacity to collaborate at this time.
While the larger infrastructure work continues, Klein has been testing small, low-cost fixes of his own.
A couple weeks ago, I brought a portable water dispenser, a generator, and some 5-gallon jugs into this station, down into the 456 platform, and I just, with a couple of friends, we passed out free water to people.
I'm Scarlett Sieber with Money in 2020, and this is how fintech companies actually make money, where globalization meets reality. Today we're going to be talking about eBury, built around the economics of cross-border business. eBury provides FX, international payments, and trade finance to SMEs operating globally. So how does eBury actually make money? First, FX spreads. eBury earns margin every time SMEs exchange currencies for trade. Second, payments and financing fees. International payments and trade finance deepen the relationship between FX alone. Third, SME stickiness. Once eBury understands a client's trade flows, it becomes embedded in daily operations. Why does this matter now? SMEs feel currency volatility immediately, and they'll pay to reduce that uncertainty. eBerry monetizes that predictability. And that is how eBerry actually makes money, by charging for stability in cross-border commerce. Have a company you want us to feature? Drop it in the comment, and it might just make the cut. In the meantime, back over to you.
In the show? Thank you for watching today's edition of Taking Stock live from the trading floor of the New York Stock Exchange. Have a great Monday night, and we will see you again tomorrow.